What's good? What's going on, everybody? You already know who this is. Man, it's your favorite educator, investor, and student, Char Blue. And I want to say, welcome to Forex is Stupid Foundation course. Yes, this is a little branch off from the podcast Forex is Stupid. So right now, I want you to go tune in on all major streaming platforms to Forex is Stupid. This right here is to help beginners. It's to help tap in with people in the mid learning of their trading and even the advanced trading to connect with like-minded experiences, personal perspectives, and just give you some tips and tricks that I learned along the way that help me understand these things. My personal view. All right. It's like my trading journal to you. Okay. And this is a spinoff from Trenches State Academy. If you know me through trading, then you definitely know that we have spent 2 years not only creating Trenches State Academy, but producing um, Trenton State Academy and had so many investors come through it. We was able to help over 10,000 families, and it was very, very dope. Those individuals were amazing to get to learn. And before that, we had a course called Abundance 333 where we hit the road and taught this course for $25 uh, during COVID. So I definitely want to continue to tell you more about those experiences, how this came, but Forex is stupid. It's the reverb of all this. And this is me giving all this education that I learned along the way and documenting the rest of my journey to you. I promise you, I've been nervous, I've been scared, but I have to do this. I started learning it in 2000 and I want to say 2020. Yeah, 2020 when it landed in my lap, ups and downs since 2024. So 4 years of going through all the craziness. I'm going to give you some scoops. So make sure you tap into Forex is Stupid podcast. That ups and downs through those journey and everything, sharing my knowledge with you. And then now giving you some real game for free. So this is if you're watching this on YouTube, thank you for tuning in. Make sure you subscribe to the subscribe button. And let's get into it, man. I'm actually been talking too much, so let's get into it. So the main thing you will learn in this course today is the ins and outs of the Forex markets and Forex trading. All right. I want you to understand the charts, which is the main thing. Market structure is very important to me, and I'm not going to go too much in depth into that right now, but market structure is very much important to me. It's not just about candlesticks and the strategy that only makes 90%, blah, blah, blah. Nah, market structure is the game. If once you can see it, you can't unsee it. You know what I'm saying? You see something, somebody say they look like somebody, and then you see it, you can't unsee it. Yeah, you know what I'm saying? Or you see something disturbing, now you can't unsee it. Yeah, it's like that. Once your eyes see it, you can't unsee it. When you see the collections in the sky of the stars, the Big Dipper, you can't unsee it. All right, so you're gonna understand the charts, the basic formula. As along the way, you're gonna understand it more. And I'm gonna introduce you to price action and the indicator as well as introduction to simple trading strategies. Yeah, so man, I got a lot for you in store. Can I wait? So let's get to it. Keep clicking. All right. So what is Forex? The Forex market is decentralized. I just want you to know that. It is the largest financial market in the world by turnover, larger than stocks. I don't care what people say. They rather trade stocks versus Forex. People in Forex, whether trade Forex versus stocks, it's really whatever you prefer. But knowing these markets really don't hurt knowing them all or knowing multiple of them. But if you just want to focus and be the mastery of one, that's definitely fine. But understanding how they all tie together is amazing. Okay, it literally mind blows you. And again, it's Forex is the largest financial market in the world by turnover. So you can literally make the money today, get it out today, make the money tomorrow, get it out tomorrow. Like that. You know what I'm saying? I said what I said, make the money tomorrow, pull it out tomorrow. You know what I'm saying? That's how fast it is. But anyway, so the participants in the Forex market, it include a group, a collective, but not just yourself as a retail trader. Other people are in the market, like interbank markets, which is the largest commercial banks, central banks, smaller banks, large multinational corporations who have currency exposure, hedge funds, and like I said, retail traders, such as yourself, that says, I want to trade in the financial market and I want to be successful. You. All right. Okay. Hope you guys got your coffee this morning. This is really good. Or tea, whatever. So what is Forex? For the Forex market is open from Monday through Friday, like a job, Monday through Friday, 5 days a week, 24 hours a day. In the Forex market, currencies are quoted and traded in pairs, and we will get into depth more. But here's an example: EUR USD, GUB GBP USD. I'm sorry, CHF JPY. These are all currency pairs. How you break it down? Just like I show you an example. The EUR USD shows how many USD you need to buy 1 euro. So you have one currency pair that's quoted that wants to be traded in another pair. Okay. Again, we'll get more in depth into this as we push forward into the courses. So make sure you stay tuned. And if you like what I like so far, just giving out basic information, hit that subscribe button, like button whenever you listen to this on. And I appreciate you for tapping in. Okay. I'm an average day Joe. Yeah. All right. So keep in mind, the market goes up, down, it reverses, and it does it again. All right. Up, down, reverses, does it again. So buying and selling comes in both currency pairs. All right. You can buy and sell a currency pair. You can buy a currency pair with the goal to make a profit, to sell it, and later for a higher price. You can also sell a currency pair and make a profit when the price falls. So you have to just know the analysis. Some people like to trade shorter terms. Some people like to trade longer terms. Some people like to go back and forth. Those specific terms like swing trader, intraday trader, day trader, scalper. Okay. So just keep in mind, different strategies, different strokes for different folks, because there's different colors for different cultures. You know what I'm saying? I'm about to start spinning these bars on you. But anyway, that's how I roll, okay? Buy and sell happens, and also reversal does too. What goes up must come down, all right? And if you already at the lowest point in life, all you gotta do is look up and get up. You feel me? So, for all the people wondering why you don't see my face right now on camera, yeah, I look crazy. My camera is not really working right now. So I'm working on getting that part together, and it will definitely be said eye to eye. So don't shoot me. Make sure you stay tapped in. What I want to encourage you guys on this channel is you may not have everything, right? You may not have everything at all, but the key thing is getting started, just doing it. All right. So I've been trying to get this thing together with this YouTube for the longest, and I'm gonna keep going. But I just had like I can't get this together. Then my camera comes, and this fall, then my computer fall. Look, we're gonna just start, and you're gonna see how I grow and how I work. Because I'm an average day Joe, you know, just trying to make a way. All right. So Forex pairs 101. We're gonna really dive in, okay? So what you will learn is understanding Forex quotes, the difference bid and ask prices, what is the spread and trading costs, major, minors, and exotic Forex pairs. So the breakdown, base currency is the first currency in a currency pair in the foreign exchange market. Forex is also known as the transaction currency and is usually considered the domestic currency. The second currency in the pair is called the quote or the counter currency. And we went through that for the example, but here's another one. EUR, which is US and USD. EUR is the base currency, USD is the quoted currency. One currency has to be quoted to be able to trade it for the next, okay? So keep in mind again, every Forex pair has two prices. Every quote, all right, every Forex pair has two prices. You have an ask, you have a bid. The price sellers are willing to sell, or the price you pay when you enter a buy trade is called the ask price. Right? But the bid price is the price buyers were willing to pay, or the price you pay when you enter a sell trade. I don't know why I sound like the second grade kindergarten, but whatever. Yeah, second grade kindergarten. So make a note of this. Write this down. The difference between the bid and the ask price is called a spread. Spread is your cost of entering a trade. Depending on the platform you use, you will have larger spreads, smaller spreads. So make sure you do the research. And I'm going to show you how to do the research and which platform is best suit you in this channel. So definitely hit that like button, hit that share button, and watch me grow, because it's time to get this thing off the road. And I just want y'all to see I've came a long way within these 4 years, and it's time to elevate. So we got to tap back in and be accountable for each other. All right, let's get it. Yep. Keep in mind, just like when you ate that last wing in the middle of the night and you thought nobody knew, but guess I'm telling you, your body knows. Keep that in mind. All right, just like that. A swap can be the cost of holding a trade overnight. Yeah, that chicken wing could be the cost of getting that extra fat overnight. I'm sorry for being so mean. Anyway, that was to me. Swap exists because of interest rate differs in the different currencies and countries. So depending on where you are, the swap rates differ. All right. In some cases, swap will be credited to your trading account as some type of profit. In some cases, again, depending on the platform and the country you are in and the currency you're pairing. Okay. I mean, you're trading on. Excuse me. Excuse me. So major key, guys. Yeah. Major key alert. Another one. I'm lame. Anyway, major key. Three categories of Forex pairs: major pairs, minor pairs, and exotic pairs. Okay. I want to stay on track with this. Major, minor, and exotic pairs. You have more, but these are Forex. All right. Don't tell me about gold. Gold is not Forex. If you don't tell me about any SPX 500, that's not a Forex pair. We're specifically talking about Forex pairs, okay? Major pairs are EUR USD, USD JPY, USD CAD, USD CHF, AUD USD, NZD USD, and GBP USD. These are all the major pairs. EUR is European, US is US dollars, all right? So you got European dollars versus US dollars. Then you have the US dollars versus Japanese yen, the US dollars versus the Canadian dollars, US dollar versus the Swiss francs, the AUD, which is Aussie, versus USD New Zealand versus USD NZD USD, and then you got GBP USD, which is Great Britain pound versus USD. All right, I'm going to make a not say make, yeah, I'm creating a I've created, I don't know if say creating, I've already created a template for you guys to go through with this. So I will have this in the link below. So make sure you guys check out the information below. I'm really gonna pack you out guys out, okay, with information. Mine appears. EUR GBP, GBP CAD, EUR CHF, GBP AUD, EUR CAD, GBP CHF, EUR AUD, NZD JPY, EUR NZD, AUD JPY, EUR JPY, CAD JPY, GBP JPY, and CHF JPY. All right, as you see, I made sure I put the currency pairs on the side and what these currencies stands for. So if you could just pause it right now, take a picture, write it down, have your note, so you won't forget it. Study it. Once you study it and you get it, when you boom, click it, just like that. Once you see it again, man, you ain't gonna forget. So exotic pairs. Exotic pairs are common. Exotic pairs crosses currency pairs. They crosses with other pairs. So exotic pairs are like EUR JPY, USD SER, USD NOK, USD DKK, USD ZAR, USD HKD, USD SGD, and many more. So yeah, those are the currency pairs. Anyway, let's keep going. Exotic pairs. Keep in mind, I don't know what's going on. Drink some water. Keep in mind the difference between majors and minors and exotic pairs. The spread on major is usually the lowest. Volume is higher on major pairs, and volatility is typically larger on minor pairs and exotic. So keep that in mind, okay? When we talk about spreads and what we want to trade. Forex trading session. This is important. Lock this in. Lock this in. You have the Sydney market. All right. You have the Tokyo market, the London market, and the New York market. You also hear some say the Asian market. That's over there with the Asian market. Forget what I just said. That was a brain fight. But then also you do also have Tokyo market referred to as the Asian market. Okay. So let's talk about these markets. You have the currencies move most during their sessions. Okay. It's important for choosing the pairs during your trading time. So you want to adjust what times you want to trade in. That's why you can treat it like a 9 to 5, because you can pick the times you want to sit down and tune in, and you can watch the pairs trade accordingly. Understand when pairs move and when they don't move. Okay. So don't be sitting here looking at the chart when the pairs don't move. They're just not gonna move. Okay. So you have trading days like for Sydney, you have trading days for Tokyo. Usually, the trading days at 5 p.m. Eastern Standard Time. For Sydney, 7 p.m. Eastern Standard Time. You can look at the chart below. For Tokyo, 3 a.m. Eastern Standard Time for London, which is the best for me. I'll tell you why I know along the way. And New York market is 8 a.m. Eastern Standard Time. All right. So we also going to go over the trading view full course breakdown, which would be the next lesson, because I want you guys just to understand the basic and some general tools on the trading view just in general. All right, just breaking it down. Hopefully, you'll learn how to navigate through it, and you'll feel more comfortable when you see others do it, and you'll also be able to, feel good about learning something new. So we'll go over where to find indicators, tools, and currency pairs on the course breakdown, trading view course breakdown. So the order types in Forex trading. I want to make sure I stay on topic. We got 3 minutes, which is probably going to pop up somewhere, but we still got time. I want to make sure I put everything in this so that you guys really get something out of it. I know there's so many other educators and mentors and gurus that's on YouTube, but seeing somebody like me, seeing somebody that really go through it, maybe you know me, maybe you don't, but seeing somebody like that, I want to learn the skill, and I already tuned into the skill. You know what I'm saying? Let's not get it wrong. I'm very humble. I'm already tuned into the skill. I've been learning this and being focused, and sometimes falling off with it, just being honest, because of life with Forex. But I've made money knowing nothing, and I made money knowing something. That means a lot. So we're gonna talk more about those experiences on the podcast. So let's just keep to we're gonna stick to it, okay? So order types in Forex trading: market order, an order that gets executed immediately. What is a limit pending order? A limit pending order gets executed when price reaches a certain price level. A take profit is an order that closes your trade in a profit at a specific area, and a stop loss is the opposite of the take profit. Right? It gets you out of losing the trades. Okay. Sorry for the K right there. Trades. But the trades. Okay. So it's the stop loss is there to keep you from losing too much money. And then the take profit is there when you say, hey, I want to get out. Hey, I want to get out when price reach this and gain this much profit. And then the stop loss to say, hey, if I lose this much, take me out. A slippage. A slippage, sometimes your order won't get executed. I don't know why I'm reading like that, but sometimes your order won't get executed at the predefined price level, but at a worse price. All right, especially in times of high volatility and low liquidity. So this is what traders call a slippage. In combination with high leverage, slippage can really result into a large loss. So you want to you want to stay tuned in to your slippage and really do your research on the platform to see if they have slippages or what are their policies or clause or whatever they have for slippages, if they have any, and what it looks like for you. Going back, I want to expand on this real quick. A market order is, like I said, it puts you in the market immediately. So when I press that button, I'm in that market. But when it comes to a limit and pending order, which I love so much, a limit and pending order is like, hey, a pending order, or a limit order, I'm gonna set it at this. I'm gonna set my take profit, my stop loss, and my entry point, which me getting into the market. And when price get to that point, it's going to put you into the trade. And you have something called a buy limit, sell limit, buy stop, sell stop. I like the limits because when let's say price is going in the opposite direction, you can wait till price go up in that direction and turn around and come back, and then price will put you into the market. So that's why I like buy limit and sell limit, but also you also could just do other things that we would get more into depth. So I will also go over more of this, but I wanted to stop and let you know the difference between a market order and a limit, which is a pending order. Okay. All right. I'm talking pretty fast. I'm sorry about that, but I want to make sure I get everything into this course. I don't want to go into depth with too much because I'll get stuck talking about the same thing, and y'all can't really see my face right now. So I want to really put as much information in and value your time. Okay. Keep in mind the time frame choice varies in person and the type of trader you are. One size does not fit all in trading. So please stop looking at people saying this is the best trading. You should be a long-term trader. This is the best type of trading. You should be a short-term. We're going to find out what type of person you are, which is going to determine what type of trading you like, depending on your patience levels, your growth, all that. So time frame is going to be different. You may like trading on a smaller time frame, and I am a long-term trader. I like day trading. So me and you, our patience are different. What we want to risk and what we want not to risk is different. Okay, so depending on the person, everybody's different, and that's what makes Forex different because not everybody is trading in the Forex market every day. The same people. There's different people, different variables. Okay, it depends on your personality. I was just talking about that. Are you a fast thinker? Do you like long-term strategy thinking or strategic thinking? Do you like to think strategically? Okay. Are you emotionally stable? All right. You got to be honest with yourself. Am I emotionally stable? Do I get mad fast? Do I have a short temper? This all matters. What is your daily schedule? And I want you to be honest with yourself because it's okay to fall off. But what is the daily schedule you follow and you want to follow? Stay accordingly. How patient are you? Am I a patient person? Man, consistency is key. And like I said, we all fall off. We're human. So if you think you're gonna come onto this game and not going to have inconsistency sometime with life, nah, man. But long as you stay consistent with wanting to learn the material and put the time in, I'm telling you, whether it's 2 hours, 3 hours, 4 hours, what even 1 hour, you got buku of kids and it's 1 hour. That's all you give. It's gonna take you learning to learn information, but tune in. I'm telling you, every day you're gonna learn something new. 4 hours you want to master it. It depends on what time you got to get. But if you got a good 4 hours every day, I'm telling you, you're gonna learn something new. You're gonna dive in deep. Even if you got an hour, you're gonna learn something new. Tap in. Consistency is key. Like I said, I'll step out, step back, and I've have stepped back to mentally take in some things and get myself together. Life is not going right, but I'm accountable for that. And I'm always reading. I'm always still watching videos. I may not just be uh directly trading at that moment. Sometimes I step back from my live account and trade on my demo to really gain my confidence back. But it's okay. I'm being honest. This is why we have Forex is Stupid in the podcast. So you can dive into real experiences, mental experiences, and the physical. You know what I'm saying? So stick to them for at least a few months. Stick to it. All right. Stay consistent. Choose two time frames that you reasonably, like close together. Like I gotta pick the time frames that I like. That's comfortable for me. That's reasonable for me. All right. I don't really don't know how much to say that, but that's true. And observe yourself. It's important to improve and adapt. You have to be adaptable. You have to be able to change. That comes with growing. That's come with learning ourselves, accepting ourselves. Okay. So you gotta once you do all that and you got that going, you want a pair selection. You want to choose a lower time frame, focus on a few, and stick to major starting off. All right, so you want to stick to a few pairs and you want to stick to the major pairs so you can see how the market actually move when it comes to choosing your pairs. So the lower time frame is for you to focus there. All right, the higher time frames, I want you to follow more. All right, be selective. I want you to like look at the pairs to see how they move on a higher time frame. Watch how they do. When you go into a lower time frames, you're focusing more because you're trying to find your patterns. When I say patterns, maybe that specific place in a double top, You're looking for the market to bounce back somewhere, so you're looking for it to um turn around and come back. Like you're looking for it to break resistance, creating it to support, or you're looking for it to break support, create to the resistance. Like it's specific things, but on a higher time frame, I'm being selective. I'm watching. I'm watching. I'm seeing how it's going. I'm not really looking at what specific place I want to enter and exit the market, what I will take profit and sell us. I'm just watching and see how the market's moving. All right, so we're gonna get more into that. Hopefully that makes sense. Position sizing and risk management. What you will learn in that is what are pips, what are lots, mini lots, micro lots, what is risk, how to use the size, how to use it to size a trade, which is enter a trade and get into the trade and all that. What is a pip? A pip is a point in percentage, but we just call it a pip. It's just, you know what I'm saying, a little pip, you know what I'm saying? And in Forex trading, we use pips to measure price distance. It's easier. So a micro lot, which equal to 1,000 currency units, is one pip, which is 0.1 cent. All right. A mini lot is 10,000 units, currency units, and that's one pip, which if it's one pip, it is one pip. It equals to $1. Okay. Then you have a standard lot size, which is 1,000 currency pairs. I put currency pairs, but I meant currency units, and so scratch that out. I'm sorry, currency units, and that one pip equals to $10. So be careful of how you're using these lot size. Ooh, we're going deep, man. We're going in it. What is leverage? Well, basically, it's like this. In trading, we borrow money. Okay, just be honest. We borrow money, so that's how we're using our leverage. You can trade larger size than what your account offered. And you just saw with the currency units. I got one pip. I may have $500. I don't want to trade it on a standard lot size. Yes, I could trade it because the leverage allowing me to, but it may not be smart to trade it because just one movement is going to blow my account. Maybe 2 to 3, it's going to blow the account. You know what I'm saying? Maybe drop it down to a mini lot size or a micro lot size, and be able to watch the leverage more and be comfortable with it. So, for example, 100-to-1 leverage, you could enter $100,000 position, all right, and you only buy or bid on it 1,000. So I'm saying, but I got $100,000 on a position of it. So risk needs to be very small. Price movement can wipe out your accounts. And when you use large leverages and you're not paying attention to your margin and leverages, it would eat you up. And this is where a lot of traders fail. And I have fell into this category as well. Excuse me. I have been depressed for days. Gold has taught me the biggest lessons when I first started trading, and I'll tell you more about that. Actually, if you go to Forex, is stupid. Actually, I did a podcast on it, and I talked about how gold really, really ate me up first coming into the game, and this was real money. So go check out that episode, and that was crazy. I had learned margin leverage is important, so that's what really killing a lot of traders. Position sizing. All right, generally, traders should not risk more than 1% per trade. That's literally, as you learn with the experiences, you'll learn why we say that. That's for real. So depending on the lot size, you may overall be trading 5% of your total, depending on your, how much you have in the account. But per trade, you should not be doing 5% per trade. Not no more than one. Okay, this way or that way. You can have a string of losses and still be able to trade. You want to be able to trade to the next day, or you want to be able to see all your trades profit or lose, or however it's going to turn out. You don't want to blow the account so fast. So a lot of traders be emotionally trading and blowing their accounts, and they're not protecting their money. This is real money. And that's why demo is important too. Because if you're going to do your demo wrong, you're going to do your real money wrong. I'm not saying you can't risk it. I'm not saying getting into the market and risk it all. You can't do. What I'm saying, if you're cool with that, you're cool with that. Go ahead, do it, make your money, player. But what I'm saying is, Don't do something that you know you're not emotionally detached of, which you know you're very connected. If I do this, it's going to affect me. Don't do it. All right. Protecting emotional capital is usually more important for the longevity of a trader. Your mental is means way more important to me because your mental, if you don't, you will learn this regardless. Like you keep continuing to put in the material in your head, dive into the materials I give you, and even if I tap in and you find some more educators, and you're like, man, I learned this with this educator, I learned that with that educator. You're supposed to, but you want to always emotionally protect yourself because if you can't protect how you feel emotionally, your capital is doomed. Okay. Again, you go watch Forex is stupid. I did an episode with Gold. About crashed out. So let's do another example. Your account is $5,000. You have 1% of per trade, right? And this, I don't know where I paused, but anyway, this is $5,000. It's equal $50. When price hits your stop, you will lose $50. Stocks are not guaranteed, so make sure you read your full broker's risk disclaimer. This is true. Make sure you read it. All right, they have different clauses of that, but I need mine locked in. You know what I'm saying? All the way in, like the sister bun of Set It Off. You know what I'm saying? And you don't know what I'm talking about? Go watch that movie. Anyway, so the stop distance, 5 pips, 10 pips, 50 pips. Lot bought, 1 lot, 5 mini lots, 1 mini lot. Markets move more in high volatile conditions. And a lot of this may not make sense, but it will make sense if you know, dive in more with me and dive into mentorship. We'll talk about pricing and stuff when it comes to the mentorship. That's where it's key at. I dive more into what I mean about stop distance, what I mean about live bar. But this is just stuff that you'll learn over time. All right. So up next, we're gonna make sense of the charts. I'm gonna have a chart part of this, so I don't want you. I'm gonna have a chart part where I just go in and mark up the chart. You watch me, and then I have a chart part where we're gonna go over specific key areas that we went over in the lesson so that you understand. So on the chart, you will understand price charts, market phases, which is uptrend, downtrend, and the range. You're gonna look at wave analysis, what that look like, price action introduction, indicator trading 101, and the basis of a reversal trading strategy. So I want to be able to make sure I execute on everything that I'm doing. If I did not execute on something that I put out on this video, make sure you drop in the comment, let me know, and I will definitely put out a video that specifically goes into depth of that concept. But I highly recommend you get tapped in with some mentorship. Even if we just tap in once a week out of the month, man, I'm telling you, price is very affordable, and you should tap in. I'll put some information, but make sure you tap in. Oh, yeah, let's get it. Oh, we done. Oh, yeah. So that's what we're gonna learn up next. So we're gonna go to the chart, and I'm going to go. I gotta tap in with some people. Outside people, but with some traders, man. They some real go-getters. There's some bosses. I've been trading with them for about 5 or 6 years now. So man, I really love them. They started with me in Church State Academy, and we've been working very, very hard into getting this whole thing up. You know, they definitely been encouraging me to do it. And the stuff is big. So we got to go tap into some information on the chart. So I'm going to go do that, and I think I'm going to release it. Today's Monday. It's after the election, so I'm going to also release some things that I may be thinking is going on in the market. I'm not saying that stuff is going to happen, but we're going to see it. You're going to see it play out. Maybe I'm wrong, maybe I'm right, and you just go watch it play out. And then on the second part of this, you're going to get a video that's talking specifically over uptrend, downtrend, and range, what it looked like, wave analysis, and what that looked like. I'm going to drop some material below to connect you with some more Forex information on those topics, and then the basis of a reversal trading strategy, what that looks like. So, make sure you tap into Forex is stupid. I'm telling you, man, we're definitely getting more and more into this, especially as the new year coming in 2025. We're going to be dropping episodes every Sunday for the podcast. And then we're going to be dedicatedly dropping Forex and stupid courses on to YouTube. So make sure you guys, like I said, follow, press that like button, subscribe, press that bell. Make sure you never miss a beat. We're definitely going to stay more consistent on everything, double down, stay focused. So it has to happen, man. I got a lot of energy, man. So I got to put it into this. I got the time to do it. So make sure you tap in. And if you need some positivity, man, tune in to www.pegstyles.com. Also tune in to Positive Energy Generations PEG podcast. Tap into that, man. It's gonna really uplift you. It's gonna really dive into some really dope artists, people throughout the year that we have got connected with. We got it connected with Omar Goody, and he gave us some really good information, man. If you don't know Omar Goody, man, that's my guy from Baby Boy. Yeah, if you ain't never seen that movie, go watch it. You ain't never seen Smart Guy, go watch it. If it's too old for you, go watch it. You too young, go watch it, man. But he was on Wild and Crazy Kids. Like we watched this guy grow up, and he sat down and dove into, which is motivated even more to go in, not have everything together, but we put it all together within a year. So look, man, 2025 will be bringing more content to you. And like I said, you'll have videos of me at my face. You'll have videos of just straight material like today. You'll have videos where you can go dive in, share with a friend. And if you want to learn more about how to tap in with me and get some mentorship, you can follow me on Facebook, Charbleau, CHARBLEAU. I will put the information below. Maybe on Instagram, put the information below. But I'm here, man. And follow us on Facebook, our Forex group, which is Master the Mind and Master the Market. If you type that in, it's gonna pull up, and we're gonna have more materials like this. But this is free. All right, this is free. I get so many people tapping in and want free stuff. This all that. Look, I'm giving you the free material that I give my students, and I gave in Forex is stupid. I mean, not Forex stupid. Trenton State Academy. We are revamping this course to put everything in the course together. And we are encouraging you to tap into the mentorship, so all of this can make even more sense. If you're struggling, tap into Forex is stupid, so you can get the mental mindset of it. And if you really need some more enlightenment, and as I share some more things with you, man, I'm going to give you 3 top Forex podcasts to tune into. So that's definitely may be my next episode for next week. So tune in. We're gonna have some more information in about that, other than myself, because I'm going to tune you into other educators that I've invested into their courses, and I've dove into their mentorship, and introduce you to my mentors and all that through Forex is Stupid. So you can not only hear me say it, but hear others say it as well. All right. So you've been looking at the screen for a minute, and I want to say thank you again. Let's tune in to the chart. See you there, and let's get it. Yeah, big brother. Let's go, man. Stay positive, man. Yeah. If you ain't growing, you definitely dying. You feel me? You gotta stay positive no matter what.
And always remember, Forex is stupid.